This podcast is made possible by Vena.
Hi, this is Amberine Tubasi, CFO of Airtable, and you are listening to the CFO Thought Leaders podcast.
This is episode 865.
Expanding internationally, we decided we were going to reduce the breadth of expansion in terms of the number of countries we were initially intending to go to. And then we were going to increase the depth of expansion. So we were going to double down into some of the larger economies and countries with a GDP and had a tendency to buy security software. So trying to really sharpen the emphasis, sharpen the focus and say, here are the three areas, the markets we're going to bet on, the new markets we're going to bet on in the coming year.
Hi, it's Jack. On today's episode, we speak with Anup Singh, CFO of Illumio. When we asked CFO Anup Singh to share with us a finance career lesson or insight from his past, it's perhaps no surprise that the late 1990s came to mind. It seems that our CFO guests lately have become ever more reflective on that period of years that preceded the dotcom implosion as they seek to help their companies navigate the murky economics of the post-COVID age. According to Singh, now more than ever, business leaders need to abide by their business model's core fundamentals. What's more, CFO Singh offers up some lessons on what's at stake when a management team, board members, and investors aren't strategically aligned. We begin after this. Managing multiple spreadsheets, disconnected data, numbers you just can't trust. Your finance team can't be the strategic partner your organization needs right now with obstacles like that getting in your way. Vena can change that. Vena brings people, processes, and systems together in a single collaborative analytical platform so you can drive connected business planning and better decision making. And it's the only native Excel complete planning platform built for Microsoft 365 with Power BI embedded. With Vena, your financial and operational data is always connected, and your teams are always armed with insights and time to focus on what matters most. So when the stakes are high and the margin for error low, plan with agility, plan with resilience, plan with Vena so you can be prepared for whatever comes next. Visit venasolutions.com/planningaces to learn more about how Vena will help you plan for anything. Hello, we're speaking with Anup Singh, CFO of Illumio. Yes, he is a return guest. We're pleased to have him with us by our invitation. Anup, welcome.
It's great to be back again, Jack. Nice to see you.
As you might recall, we do have a price of admission for our guests, even for our return guests, and that is to look into the past and identify those experiences you feel prepared you for the finance leadership role. What would come to mind?
Jack, I have been lucky on a few fronts. Early on, I had the opportunity to be involved in high growth companies. So going all the way back to the 90s, after I came out of Ernst & Young, where I started off in public accounting, I worked in companies like 3Com, and then I went to Excited Home, which was a high growth, a broadband internet company at the time that was the pioneer in broadband. And so at Excited Home, it was a business that was transformative. We were growing like crazy. We were disrupting. We were changing how the world actually operates. And so I realized early on that the role I had to play as a a finance leader. So I had the job as controller of the international operations of Excited Homes. So my job was to work super closely with the leadership team to grow the business outside of North America. And so we expanded into Asia, into Europe, did acquisitions, did joint ventures. And so during the 90s, if you recall, there was the dot-com boom at the time. And it was a time of great change. And a lot of the lessons I learned from that period of time was around flexibility, adaptability, how to invest resources, which were still somewhat limited at the time in a period of hyper growth. And then, of course, after that, you had the implosion, the dot-com implosion, and it all just came, to a grinding halt. And so it was, again, being flexible and adaptable and changing things. And so I think for me early on, the ability to be involved with high growth companies, growing businesses, driving that change, driving that transformation, and then having to adjust, having to shift gears as the macroeconomic environment changes, was something that really, I think it's trained me well, and I think it's equipped me well to handle situations such as the one that we're currently in, which is a very obviously a challenging. We had the dot-com implosion of 2000, 2001. We had the financial crisis of 07, 08. We had the COVID thing in 2020, and now we've got a situation where the global economy is heading into recession, and inflation is high, and interest rates are high, and the stock markets are down, and so I feel like I've seen this movie a few times before.
Exactly. And if there's a silver lining here to the last 20 years and the ups and downs, it's that it's been an excellent training ground, let's call it, for future CFOs. It's had more than its share of economic obstacles and surprises. Still, since it was so early in your career, I'm wondering if you could go back and maybe just give us a better sense of what some of the indicators might have been for you back at that late 90s period when the dot-com implosion was on the horizon. There were some early indicators, perhaps. Anything?
Yeah, no, a couple of things. Look, I think it was Alan Greenspan who coined the term irrational exuberance, I think, at the time. And I remember it was a time when availability of capital, there was a lot of capital in the market. I remember companies were doing acquisitions. We had bought a greeting card company by the name of Blue Mountain Arts. We spent $1 billion to acquire a company that had $0 in revenue. And the idea was, it was eyeballs, right? You were trying to do the purchase of eyeballs, which in this sort of day and age would be users or subscribers or, those kinds of metrics. And so I think the time there was a lot of capital, easy capital, cheap capital, chasing growth. And I think that sort of it got away from a lot of us, where we ignored the business, sort of the core fundamentals of a successful sort of business model. And I think Excited Home was a casualty of that. I mean, there are hundreds of other companies of that era. There were companies doing Super Bowl ads when they were blowing a bunch of capital, on the likes of pets.com, if you remember, in those days, right? So I think the key for me, the learning was the market just sort of, it woke up and said, this era of cheap capital and access to liquidity and the sky high, valuations, and the stock market had gotten out of hand, and companies were trading on metrics which were non-GAAP metrics that frankly were meaningless. And I don't necessarily know if it's reasonable to draw a parallel to some of the events we've seen in Bitcoin, as an example, in this sort of day and age, where the valuation of some of these assets or companies have gone through the roof, and now we're actually seeing a bit of a come down to earth as investors are asking, are looking for cash flow, they're looking for profitability, they're looking for these core elements that ultimately drive the value of a business. We all know the value of a company is the present value of its future cash flows. And I think at times we get away from the basis of saying, hey, you need to make a profit. You need to generate some cash ultimately.
So we want to ask you about Illumio and get updated how this company has grown. But I do want to, we want one more takeaway from you. Your observations at that time regarding maybe upper management, investors, the board, how they behaved, how it might have influenced how you think today, what you do or don't do. If you think back now and observe upper management or the board, what is it that might have surprised you or is interesting for us to think about?
It was a learning experience for me at the time, was how important it is to be aligned on corporate strategy as a board of directors and as investors in a company. And I remember the days when the ownership structure, as an example of the company, was so complicated that Excited Home was owned essentially through a consortium of cable companies, AT&T, Comcast, and Cox, and all of our owners and investors had certain interests which were not aligned. So, it's a nice way of saying that the board was not aligned on corporate strategy. And as a result of that, I saw the struggles between the management team, between the board of directors. And so, for me over the years, I think the importance of having alignment on an executive team and deciding, here are the, 3 bets we're going to place, as an example. Here are the products we're going to build. Here are the markets we're going to go after, and this is the market that's core, and this is the market that may be an adjacency to where they were at. But to me, having alignment in strategy, having the key stakeholders, your investors, your board members, your management team, and then ultimately your employees, that you absolutely need to empower, and you need to have all of their goals and objectives aligned, and kind of it rolls up to the company's goals, right? So I think, again, a lesson for me coming out of that experience was how absolutely important it was for the leadership of a company, and then everyone else, all the stakeholders, to have alignment on the key aspects of corporate strategy.
Well, thank you for that. Some nice detail there for us. Let's find out how this company has grown since we last spoke, Anup. Illumio today, again, it's in the cybersecurity from what I recall, and how you stop breaches from spreading within the organization. Interesting topic, one we can all learn from to understand better. But tell us about Illumio and how it's grown over the recent years.
Yeah, so Jack, I think the last time you and I chatted, it was about 3 years ago. I had been CFO of Illumio for about a year at that time. Now I've been in the seat for a number of years, been here. I just celebrated my 4-year anniversary in the seat. The company has grown fantastically well over the past 3 years since we chatted. We are as you mentioned, a late stage security software, a company. We're addressing the containment of breaches and stopping the spread of ransomware and bad things from happening. A year ago, 2021, slightly over a year ago now, we did our Series F, which we raised, about 225 million in our F round at a valuation of 2.75. So the valuation of the company has grown, and that's obviously aligned with the growth in the revenue, the number of customers that are using the product. And so I've seen and helped alongside the executive team really drive the expansion in the company. We've expanded the number of geographies that we're in. International, as an example, accounts for about a third of the customers at the company. We have expanded the portfolio of the products that we sell. A couple of years ago, we sold a single solution. Now we're a multi-product organization. We're expanding the platform, if you will. So we're now much more of an end-to-end solution. We are the leader in what's called zero trust segmentation. And security, I mean, in this environment, as you alluded to, is a really interesting industry to be in. We're solving, in our minds, a very important problem. And I think there's a lot of opportunity to bring our solution. We do it in ways that are cheaper and better and easier. And just trying to solve really important issues for our customers.
So this being it's a SaaS offering, we know it's the unit economics, but we're interested in the types of metrics and numbers that you've begun to supply to other parts of the organization to better educate, to change behaviors maybe. And, as that product evolves, similarly, has your decision-making support function evolved by helping people access the data they need to make decisions? How has that evolved?
It's come a long way. So, we've made substantial investments in people, process, tools, and all of this is geared with the intent of supplying real-time information to help us to run our business. So, this goes for the BI tools we use in our business, where we have the ability at any moment in time to have access to the pipeline, looking at deals, looking at the stages of deals, how they're moving, looking at opportunities we've closed, opportunities up for renewal, looking at if there's any activity from a churn, all of the KPIs. So look, the way we manage the company and the way we run the company, it's as if it's a public company. And so, I think I mentioned to you the last time that, we close the books in a week and we do all the reporting on a cadence, which is similar to that of a public company. And all the metrics and the KPIs and the data that we use to run the business is as you would expect for a SaaS company, a public company. And our view is that the culture of data is a really, really important aspect of who we are. And we do our QBRs, we do our operational sort of the reviews of the business. And so the notion of operational excellence is one that I take extremely seriously. And I think that our job and my job as the CFO is to take the data, and then to translate that to information that obviously can be used in real time, understanding the campaigns we're doing in marketing and the ROI we're getting for each of the campaigns. Or if we're investing in a product and we're going to build a product, how soon can we get the payback from that investment in R&D, as an example.
When you say 3 years ago, when you calculated customer lifetime value versus how you calculate or look at that today, and let me know if this is a relevant question. Has it changed? Are you doing it entirely different? No, it's basically the same, Jack. Customer lifetime value, is it the same? Have you tweaked it? Have you done something differently there?
No, we haven't changed how we've calculated it. The thing that has changed is that our LTV, or lifetime value, has actually increased, and it increases because essentially the average ARR or the average amount of revenue we're getting for each one of our customers is increasing, and it increases for a couple of reasons. Number one, because we now have the ability to upsell and cross-sell. I mentioned expanding the portfolio of products that you have to sell to a customer. So our customers are adopting this cadence of land and expand. So they buy, they come back, they buy more. The other thing that's happening is the rate of retention of our customers is very high. So the rate of churn, which actually is inversely related to the lifetime value of a customer, the rate of churn is quite low. And so as a result, we tend to find that the customers are happy, and this is is a reflection of obviously the quality of the product, the value of the product, the engagement they have with the customer success organization of Illumio. And so, they buy and then they come back and they do the renewal and then they expand and so on, right? So the LTV of an account is correlated to both the amount of stuff essentially a customer is buying and also how long you keep the customer, how long you keep them for.
And is it that LTV? And again, is there a particular number, perhaps related to LTV or not, that you have sought to better expose to parts of the company, whether it's operations, whether it's finance? I don't know. But I'm looking for a business dynamic that you've begun to measure that perhaps you didn't give it much attention 3 years ago, but it's become more meaningful. And maybe it's the economic environment and how this customer cadence could be impacted. I don't know, but what a dynamic that you're zeroing in on?
Yeah, no, it's a good question. And the correlation, I guess, the corollary that I look at is something called, the magic number. It's also related to the payback sort of period, right? So we'll start with the magic number, and this is a number that basically it tells you for each time you invest $1 in sales and marketing, how much are you increasing the ARR of the company? Right. So in other words, the return you're getting from $1 of investment. And so it is a measure of your efficiency of go-to-market operations. Another sort of a variation of that is what's called the payback period, which is telling you how long it takes you to recover $1 you invest in sales and marketing from a customer. And there are benchmarks out there. For example, if you sell to large enterprises, the general sort of the rule of thumb is if you have a payback of less than 2 years or 24 months, it's good. Or if you have a magic, a number which is greater than the 0.75, in other words, you spend $1 in sales or marketing, you get, 75 cents of incremental ARR. Or you have an LTV to CAC of greater than 3 or greater than 4, right? So these are all the metrics, and there are industry averages and benchmarks out there that we look at. And I'm pleased to say that, as we see that sort of, the cadence of landing, expanding our business, that, Illumio is actually, exceeding all three of these, the metrics that we track. So, yeah.
We want to ask you about FP&A, given the fact you've had multiple CFO chapters now, how you view that function, how do you deploy it? What is your FP&A mindset really when it comes to the role FP&A plays?
And look, I always say, as leaders and as executives, we, our job is to look around the corner, right? That's why we get the big bucks. And so, FP&A is where I spend, I would say 60%, 70% of my time. Don't get me wrong, accounting is great, and, the closing of the books and the reporting of the numbers and getting the audited financials, it's table stakes. I think we are talking a lot as we do kind of the wrap on the planning for the coming fiscal year on how can we sharpen the focus of the company, and the 3 or 4 things we're going to do to really move the needle for us as a company next year? Because you need to be laser focused, if you will, and say, here is how I'm going to place the bets, right? And these are the investments I'm going to make. This is the ROI, here's how much it's going to cost. And so, doing the analysis, having the data, and being able to support the business investment, essentially doing the business sort of case, becomes really, really important, especially at a time when access to cash and capital and resources is scarce. And so, with our organization and the CFO team at Illumio, we do a stop, start, continue exercise every quarter. We look at things we're doing and say, we need to stop this, we need to start this, we need to continue. So that just enables us to really be adept and be flexible and be able to move as the needs of the business sort of move. So it's all about the.
Can you give us an example of something that was stopped?
Well, there are a lot of things that have been, I would say, it's been de-emphasized. So as an example would be, expanding internationally. We decided we were going to reduce the breadth of expansion in terms of the number of countries we were initially intending to go to. And then we were going to increase the depth of expansion. So we were going to double down into some of the larger economies and countries with a GDP and had a tendency to buy security software. So, again, trying to really sharpen the emphasis, sharpen the focus, and say, here are the 3 areas, the markets we're going to bet on, the new markets we're going to bet on in the coming year. Similarly, in deciding how to spend our R&D and on the innovation front, you have a wish list of 100 things that you need to build, right? Half of it is coming from customers, the other half is coming from the field team saying, oh, we need this and that, and then agreeing and saying, you know what, we're going to build these 12 things, and this is the ROI, and this is how we're going to track it and measure. So it is about really honing down, sharpening the focus, investing appropriately.
Excellent. Well, we want to ask you what is another standard question of our signature question, where we ask you for one finance strategic moment that you've experienced over time. You've already shared a few with us, Anup. So just looking for a moment of insight that you experienced during the course of your career. Again, you've had a number of CFO tours of duty. We're wondering if there's a moment of insight that you can share from your past that you responded after seeing something, whether it was a risk you avoided, an opportunity you pursued. Anything come to mind?
Yeah, look, I think something early on, which was really important to me, and I encourage the folks on my team and new CFOs and leaders to do, is really understand the business and get outside of your zone of comfort. And I'm going to explain that a bit more. If you are in a manufacturing industry, or you're in a biotech industry, or something where you're building a product, you're manufacturing, it is imperative to be able to make sure you walk the factory floor, understand the manufacturing process, understand the product, understand the inputs and the outputs, and the underlying unit economics of the product you are building. I've done that. When I worked at Trimble, we were a global organization, manufacturing. I used to go around, the world to our various facilities. It was imperative every time I did a trip, I made sure I toured the factory. I would stop. I would have the conversation with the folks on the assembly line, asking them how they're making the product and the reason that they're building, assembling, designing in a certain way. Another example of that is to get on the phone, and especially if you have a customer support organization. In the majority of companies I've joined, as part of the onboarding I do, I spend half a day inside of a call center and I listen, because it is really important to hear from your customers, right? This is the voice of the customer, the challenges they have with the product, the issues, the feedback, how our team are dealing with those issues, how are they responding? So for me, as a part of accumulating the mentality of being a GM of the business, which is what I encourage every CFO and every leader in finance to be, is to really serve the role of a GM, a general manager of a business, is make sure you understand the product inside out, right? If you have a manufacturing floor, make sure you walk it. Ensure you're hearing your customers, listening to the customers, and go on sales calls, right? So go on calls and meet the partners and meet the channel, meet the alliances, go to trade shows, and make sure you walk the floor and you look at the booths of competitors. Understand how the messaging, the framing, the marketing is done of their product. So at times we're all super swamped. There's a lot to do in the office. It's easy to be here at the desk with your head down. But, for me, a great insight early on that I sort of learned was the importance to get up and get out and to really understand the product, the customers, the ecosystem, the marketplace, because it helps me do a better job.
Hi, it's Jack. I hope you're enjoying our discussion with CFO Anup Singh of Illumio. You might recall we kicked off today's episode commenting on the uncertain economic environment. That uncertainty, of course, is related to inflation, the possibility of a recession, the lingering COVID threat. But there seems to be something else, another factor that's contributing to the uncertainty. And we wonder whether it's a growing pervasiveness of AI technology. One widely accepted belief concerning AI is that its powers are exponential. So the first leaps forward may be startling, but what's yet to come will be far greater and sooner than we even imagine. Now back to our episode featuring CFO Anup Singh. So we're up to our question, which we like to end with, which is, as you look forward the next 12 months, what are your priorities as CFO of Illumio?
Yeah, look, it is all about efficient growth. So what does that mean? We're a high growth software company. We're doing well. The market is saying to us, it is no longer about just growth at all costs. It is about efficient growth. So what does that mean? It means showing improvement in margins, showing improvement in cash flow. Do you have a business, a model which is structurally sound? How is your gross margins, as an example? So at Illumio, our emphasis, number one, is to continue to drive growth from a top line. And this is through the expansion of, I mentioned earlier on, the portfolio of products that we sell, expanding into some new some markets and geographies, and so on. And we see a rapid growth in the pipeline for the security software that we sell. But at the same time, it's about doing it efficiently. And so it means, as I mentioned, ensuring we are investing smartly. We are tracking and evaluating and measuring the ROI from those investments. And I talked about the stop, start, and continue exercise, saying, how can we sharpen the focus, right? How can we ensure we're placing the bets on things that are going to move the needle, but at the same time, improve our profitability, improve our cash flow. So, we're doing the balancing act of driving growth from a top line and at the same time improving our bottom line. And if we do those things, we're going to continue on the path of building a very large, durable, standalone security software company.
CFO Anup Singh, thank you for coming back and talking with us again. We appreciate it.
Great being here, Jack. Thank you for having me.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.